know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at the E-mini S&P on an hourly basis. There was our high yesterday up here at 53.47. After I saw that 1.27 expansion in the S&P future cash market and no follow through in the futures. Also saw the same thing in the Dow Jones, the NASDAQ, and all four of the futures indices just barely made a new high and didn't do anything. So I said, well, maybe this is going to be a high, maybe a tradable high. So all I decided was, if that's the case, we want to look to sell the 382 retracement. So last night we had an order setting in here, right here at the, you can see the 382 retracement came in here at 26. The high was 26, and well, actually, the number was 26.89. I said to sell at the 26 level, and risk just 5 points. Now we've come down, and we've made a lower low than this one. From my perspective, looking at this on a mini basis, that gives us a new 382 pattern, folks. That comes in here just a slightly bit lower. In other words, making just a new high on that day will be a new 382, but it should not follow through. So that's what I'm looking at. Now, folks, let's put the pedal to the metal and get the old tractor and plow out, because we're ready to become farmers. Hold on just a second here. Be careful what you ask for, because when God opens a window, he closes some doors. We sold corn right there on our long corn that we bought way down here. Okay, that was a nice $15 move. It's a now we saved $1,000, and where is it setting? If you believe in heaven, and this is it, there's your 382 laying on the door right now here at 477 1/2. We have taken out the low of last week right here by just a little bit. And this is where we're supposed to be. If you can't buy it here, folks, turn your chart pencils in and go home. You got to risk a little bit more than you might think, but your stop's got to be down here. Remember, you made 30 cents on the way up. You're risking 10 cents on the way down. That's the way I'm looking at it. So I don't know if it's going to work or not, but give me this trade 100 times, and I'm going to win 2 or 3 of those. I'm pretty sure anyway. But anyway, watch this very closely. If you want to play a real close stop, because it's Friday, you could put 3 or 4 cents in if you want. But frankly, this is what we waited for. If you remember, we talked about this all along. The only thing that is a little different here is that, what is that thing? I hit the wrong button. That's shut the front. No, I'm screwed now. Hold on just a minute. This ends and stuff. I'll have to figure that out at the break. I don't even know what the darn thing is. Anyway, here's what we were looking for. This is what I wanted to show you. The last corrections that we had in corn, we had this correction right here. Boy, all my frustrations in this business are related to, you know what? Let me get this up here now. Hold on. We had a correction right here. All right. We went to look, and you can see we've matched that correction there. We've matched that correction there. So there's correction 1, correction 2, correction 3. So if you can't buy it here, you can't buy it anywhere. That's the bottom line. It's a Friday in an up week in the stock market, so I would not be surprised to see the stock market close higher on the week. Our guest today will hopefully be Peter Lighty. He's got a new YouTube out. Folks, no matter whether we get Peter on the line or not, because he gets very, very busy, try to go to youtube.com and go on to see Peter Lighty's video that he published last week about a 191-week cycle that we're looking at that basically explains why that S&P cash has moved up, but the futures have not. It's related to the Philadelphia Semiconductor Index that I don't know anything about. and I've never traded it. I understand today for the first time they actually have a futures on it, and I wasn't even aware of that. So anyway, that's the corn that we're paying attention to. All right, let's go back and look at the next one, which is the wheat. So let's get up here and do one at a time. I'll do these. Oh dear, we got a bunch of stuff here. If you're in the metal, if you're in the crude oil and stuff, folks, just hang in there because it looks like it's. Hold on, I've got to correct these. Get this so I can see where we are on here, because where's the wheat at now? Now the wheat's disappeared. Anyway, if you bought the gasoline or the heating oil or the crude oil, gasoline's gone farther. It's gone 12 cents up. So make sure you don't lose any money on that. Okay, I'll do this. I might as well do wheat right now. Hold on just a second. Let me get it up here. Oh, I love technical difficulties. Okay, here we are. Here's Christmas wheat, the one we're watching here. We'll start with the daily. Okay, we had that giant ABCD up there, as you can see. Now we're having our biggest correction so far, folks. See, this was our biggest correction before. Now this one's bigger. Why is it bigger? Because this is a bigger cycle. There's your first A, B, C, D cycle there. Second A, B, C, D cycle right there. Okay, and now we're coming down. And right now we are below the 382 of this one. But remember, on the corn, what we did is we took the 382 off of the actual low back here. All right, so you put that in. That tells us that you could get wheat. And remember, wheat is a lot more volatile than corn, as you can see here. Here it moved buck and a half, let me see, almost $2 a bushel, and now here's where we are. If you get wheat down here, folks, which is at $6.74, down another 24 cents, that's the 382 of the whole thing, and it's going to be a 61% retracement of this one right here. That's what I would be watching for, is to be watching that. Now, the reason why is because this is a much bigger move. So you got to figure out what that movement is at that particular time. Okay, now let's cover another one that we were watching closely. If you remember, we were watching the euro yesterday, folks, and the euro had, let's get this up here. And there's where we were as of yesterday. Hold on just a second. I want to get the daily up, because you should have made at least a profit. Hold on a second. In the you can see how we came down below that level. That was your first profit objective. Let's move this around so we can see it. We sold it right up in here. We got all the way down here to 36. So that was a $400 profit that you could have locked in. Now let's just play devil's advocate and look at some of the things that I like to watch when I'm intraday trading. Whoops, I've already put it in. There was, got it, technical difficulties again. There's your low, there's your high. It missed the 382 here by 9 pips, folks, the 382. Now, what I decided to do, because we sold it right there, was to put my stop at break even, and he just hit it just a little while ago. I just got filled right there. I sold it right over here. It came all the way down. This was the middle of the night, and I didn't get to see this until early this morning, but here's where we were. And let's take a break, and we'll be right back. More ABCD to follow. Buckle up your seatbelts, folks.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
We're back, folks, and I believe we have a caller from New Jersey. Jeff, are you there?
Yes, Larry. How you doing today?
Pretty good, buddy. What's up? What are you looking at?
Yeah, I want to. I'm short corn and December corn. I want to show you why and just ask for your thoughts on it. If you can go back to the daily chart on
I've got
corn.
it right. I've got it. We're looking at it right now. There should have been short.
Okay.
That was where there was a triple ABCD up there, and that's why we were taking profits. And go ahead.
Right, but you're looking to buy it at the 38 retracement. But I want to show you why I'm short for a much longer term.
Okay.
So could you pull your daily chart back to about June 20th of last year?
Okay.
And you'll see
there
a
we are.
high.
And let me guess, that's probably exactly 382, isn't it? Shut the front door.
So if you pull it back to June 20th, there's a high at about 565, and we just touched the 382 of that range, and that's why I shorted it. So, based on that scale, it's got a lot more downside to go. Do you think that's
correct?
Do you agree with that?
I agree with it. I mean, I was watching that pattern. I focused everything, of course, on this part of the pattern because that's the last 4 or 5 months. And where I'm setting right now is I'm setting right at a 382 off of the low back in February. I'm at a 61% retracement of the low in May, and I'm at a 50% low of April. So I got 3 numbers sitting there at 477. In order for me to be short, I had to put a hammer to my head and start banging until it stops going down. I have to be long here, Jeff. I don't want to. Hey, listen, I don't want to affect your trading because I'm wrong a lot. I'm also right a few times, but this is one of those times.
I guess we could both be right? Like you could be right in the short term. We could go up on that 382 for a bit and then turn around and go back down.
It might rally 3 cents and then fall out of bed. I don't know. But all I know is I've been waiting for this for I said Friday, and today's what? What follows Thursday? Friday. Oh, here we are. See, it did exactly what we thought it was going to do. It made a perfect ABCD up here, multiple ABCD. That's why we were taking profits. I gave them the option to go short if they wanted to. I don't tell them how to put their orders in, but I said, we're going to have a correction at least down to this level, and knock on wood, here we are right now. So I don't know. I will tell you this, Jeff. If you get much below 475 today, being a Friday, the farmers are going to be wondering, maybe I shouldn't be long corn over the weekend, and that's it. Besides, the wheat has another 30, 40 cents to get down to its 382, so there's still a possibility that we could break here. The one good part about this, and I mentioned it before, if you wanted to be really safe, you put your stop at 475 and 3/4 and risk $100. And believe me, corn is a big market. They're not
what has me
listening to Jeff and
concerned,
I.
the stop, won't help us over the weekend. That's why I called in. Larry just made me nervous now about holding this over the weekend.
Good luck. That's what happens when you trade. I'm just giving you my 2 cents worth, my friend. I don't think there's anything going to happen. Well, God, look, we got silver up $1.20. You got gold up, pressing 2,500. So, anything could happen to these things. So I would just, Jeff, you sold it good. You got $1,000 profit in it, buddy. And if you want to, first of all, if it does gap up, it's not going to gap up 20 cents. And frankly, I'm not even sure it's going to do that. So you have to make that own decision. But do one thing for me. Don't worry about it. Just put the stop in and then not worry about it. Then you're going to be okay.
All right. Well, I'm using the mini contract, so it shouldn't bankrupt me.
Well, it depends. If you got 400 or 500 of them on, that's a lot.
That's true. All right, so I guess I'm going to hold it over the weekend because I like this bigger range picture of it.
That's good. That's good. I don't disagree with that. First of all, I bought it at 477.5, and I'm break even, and you sold it, and you got $1,000 profit. So how are we going to figure that one out? Anyway, listen, thanks for calling in. It's a really, really good question, my friend. Very, very good question. Sure is.
All right, thank you, Larry. Take care. Have a good weekend.
You bet, Jeff. Yeah, thanks for calling in. Okay, that's a really good question, folks, because there's a different time frame. See, I'm dealing on these last 4 months, and he's looking at the 382. Just by looking at this on the weekly basis, you'll be able to see it. There it was, right there. It's good. There it is right there, the one he was talking about. There's your 382 of this move back in June. You see that? He was talking about this move in June, and there was your 382 coming in right there, and he's short here. Looking at this on the weekly, Jeff, give me your position because I'd rather be short than long, and I'm long already, but because of my time frame is different, I got to stick with it. And folks, I am really bullish the grains. Let me just give you a reason why. I've been in this business a very, very long time, more times than I want to even mention, but let's take a look here at a couple of markets that are just going wacko to the upside, and one of them, of course, is the gold. And so let's look at gold first. I got to get these things straightened out here. I'm not sure Peter's going to be able to make it today, unfortunately, do the cascade here. Let's take a look at I want to show silver first because I saw something today in silver that really was very exciting. Now, here's what we've done. I just wanted to show you the importance. You see these double 1.618s right here? See that double one? Look what happened when we went above that, folks. Off to the races. Now, if you like to come to the show next Friday, here's what you want to be remembering. After you had a low right here and the market backed off, it backed off from 80. It dropped 50 cents, right, or 44 cents. $2,000 it dropped and hit this right on the money. Now, if that's the case, like what we're looking at right now, you see his big brother up here? Here was his two cousins over here. There's his big brother. What's that going to tell us? Guess where silver should stop today? In my opinion, and of course, that is shut the front door and raise the rent. I'm going to have to do it the hard way. That's this way from there to there. It still doesn't. I'm going to extend it out. There it is. Okay, that'll do it. There's the move. There's where we're going to be closing today, or hit it, and we get above this. Who knows where it's going to go? You can see here we had a 382 pullback right here. Okay, now let's just see if that 382 is still in vogue. We had a low here. The market backed off from 31.04, dropped 25 cents or $1,000 from your low up to your high. Came right down to the old 382, stayed here for a good half hour, and then off to the races again. And now, look at that. You've got double patterns up here in the gold. You see, or silver. See that? There's your drive one. drive 2, drive 3. Don't sell it up here, folks. We get above here, you'll be looking at, I really think, let's just look at this on the long-term weekly chart here on silver, because you see this, you do not want to screw with that one, okay? There was the old high, there's the new high, and this tells us we're going high. So don't mess with that. This last pullback that we had, and well, it doesn't make any difference what I say. There's your pullback right here, exactly at the 382 of the weekly. We bought some of that back here, got out a little too soon as always, but there's what we're looking at. We're going to be looking at something a lot higher. So look at it. We're taking the highs out from 2020. Hello, operator. This is on the move. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we have Peter Elides of Stock Market Cycles on the line that I've known for quite a while. Peter, I've watched this video 3 times, and that YouTube video. Do you want to tell the folks what you're looking at here? Because when I saw it, I just couldn't believe it. But so please tell us what you're looking at.
Yeah, so you can see my chart, right?
Oh, everything's coming great. Yes, and I've told the folks to go to YouTube and make sure they watch it at least once. And can I ask you a quick question? You and I have been around for long. We knew Richard Russell when he was alive. He lived to be, 99? And he was the dean of the stock market technical stuff. And you were right behind him, of course. But why is it that the Dow Jones Transportations have been at the 38% retracement for 2 weeks and cannot even close above it, with the Dow Jones moving 1,200 points higher, the NASDAQ moving 500 points higher, and the S&P 200 points higher? Am I missing something?
I'll give you an answer to that. It might not be the best in the world, but
I don't have an answer, so
toss a 200-day moving average on the chart and see what you see.
Okay, I'll do that.
If you put a 200-day moving average on it, let me see if I can quickly bring it up. I'll try and do it for you, Larry.
Peter, please don't. Please show me what you have here, because this is really good. This is the best and I've known you a long time. This is the most exciting thing I've seen in quite a while. So take a look at it.
What I've done is, because of the obvious speculation, not in the text, but more narrowly based in terms of the semiconductors, I initially started this ratio that I did with the NDX, the NASDAQ 100, versus the Dow Industrials. And we might have a chance to look at that one. But then I started thinking, wait a minute, the NDX is not as representative of artificial intelligence as the SOX would be. So let's look at the SOX. Well, the SOX was initiated as an index back in, I think, 1994, Larry. And this is the history of that ratio of the SOX, Philadelphia Semiconductor Index, to the Dow Industrials, going all the way back to 1994. Now, will I be able to do motion on this and go back and forward on it? You'll be able to see it?
We can. You've got the whole thing. Okay. It's just like you're.
So here it is. This goes back to 1994. This is the SOX up above. The Dow is in the middle here. I don't care about that, because we're just using that as an instrument to give us a ratio. And on the bottom is the ratio, NDX divided by Dow Jones Industrial Average. And I want you to notice that for most of the history of that ratio, if you see the scale way over on the right, it's between 2, 3, 4, 5, maybe 6%. Well, let's go forward little by little and see what happened in the crazy year of 2000. Now, 2000 is in the middle of the screen right here, Larry.
Yep,
and
you see it?
Okay. On March 10th of 2000, that ratio went to 13.4%. You can see that in the bottom box here that I have selected, 0.1343. On that very same day, the SOX reached its all-time high. I'm going to do a closing price chart so you can see the closing price. It occurred right here. Now, mind you, this occurred after this crazy speculative move, almost vertical right here. And this is what the ratio got to be, 0.134. So when I looked at that, I said, my gosh, I wonder if we're up to that, if we've gotten up to that ratio this time around. And the interesting thing is that the NDX did reach an equivalent speculative reading in November of 21. But let's look and see what happened in November of 21 with the SOX. So here is where the markets topped in 21-22. And the SOX topped, I think it's December 27th or 28th. But the ratio did not get up to that 13.4. This is the ratio. It got up, the highest it got up to was 11.2%. So that was speculative, but not anything like the speculative fervor that we saw in March of 2000. So let's fast forward now and see what happened.
March of 2000 was the dot-com bubble, wasn't it?
That's correct.
Yeah,
now we're going forward. Now in October of 22, it all the way down to around 7%, which is still relatively high, but nowhere near that 13.34% we're looking for. Now let's go forward slowly from there, Larry, and see what's happened in the past several. Whoops! Look at that. Right here. The ratio of SOX to Dow Jones Industrial Average on the date of March 7th of 24. Look at the bottom of that box, if I can hold it steady enough. 0.133, a ratio of 13.3%, almost the exact same ratio that we saw at the exact high in March of 2000. Now let me show you the chart above on that very same date. Here's the reading right here. Here's where the SOX was right here. That's the all-time high right there. That happened 2 months ago, March 7th. Okay. And we have not gone to a new all-time high on the SOX. We got pretty close yesterday. We got up there. But finally, after a quarter century almost, Larry, we matched the ratio reading that we saw in March of 2000 at that crazy top. And when I saw that, I can't tell you how excited I got. I said, my goodness, look at that. The exact same order of frenzy and craziness that we saw in March of 2000. Now, let me quickly go back to March of 2000 because I know some people will remember it, but a lot will not. Here's the March of 2000 reading on the ratio. Here's the all-time high. This move from March 10th of 2000 to October of 2002 was minus 80+% from here to here.
Yeah, I remember it very, very well. That was the old .com bubble. If the phone rang and there was a potential sale, the stock would jump 50%.
That's right.
Yeah. Peter, we have a break coming up here, but would you have time to go through your 191 cycle that you had? I had more comments about that than just about anything I've seen in the past couple of years.
Sure.
We'd like to be able to do that if we could.
We sure can. In fact, I've updated it. Sure.
Oh, great. We're going to be right back, folks, with Peter Leides of Stock Market Cycles. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, with Peter Leides, the Stock Market Cycles. Peter, please continue.
Okay, this is exciting, Larry.
I know it is, Peter. I couldn't even sleep when I saw that thing last night. I watched it 3 times.
Well, what's interesting about it is, with period, this is what I call a turning point pattern. It's not just all bottoms or all tops measured equidistant apart, but it's turning points. And I didn't believe in them when I first started looking at them. I said, no, I want top to top to top, or bottom to bottom to bottom. And when I saw how well some of these worked, I said, okay, I'll accept it. So this started out as a 196 trading day turning point pattern. Now, I've adjusted it over the past week or so because we went slightly higher, slightly higher, slightly higher. So I said, okay, does the pattern still fit? So as of yesterday, I want you to take a look. When I click on this line, it'll say spacing 200. So I'm now out to 200 days, but watch what happens with those 200 days, Larry. Back here in March, April of 2021, I'm not that interested in that, and that wasn't that great a resolution. We had a bottom there, but it came down and tested it again. But we had a move from here up to here of 27%. This top right here, well, it doesn't. You say, well, there's a double top there, and this one looks slightly higher. Let me show you the closing price chart. This is the exact closing high all time in the stocks at that time, okay? So that's where we continue the count of 200 trading days. Let me go back to the high-low chart again. Now we come into October of 22. Now, you can see it looks like we're a day or two off here, but again, if I zoom in on this, you can look at cycles a lot of different ways. Notice what the lowest high is in this whole group. We came down into this October low of 2022. This 200 days, which is the end of the pattern resolving here, that's the exact lowest high that occurred. There was a lower low the very next day. So no matter which one you use, you're either exactly on the lowest high or you're a day away from the lowest low. So now we continue out from there. And we go forward into the next resolution, August 1st of 23. Well, I don't have to make any excuses for this. You can see that that's spot on right there, the August high of 2023. And this was a 16.4% decline. Now, this resolution was a little different because we not only had a big decline from there, ultimately we ended up having a pretty big advance from there too. Let's go forward and see the final resolution here. Look at this. I'm going to space this apart a little bit so we can see it even better. right there. Here's day number 200, Larry. That's yesterday. And this is today.
Yeah, it's going to be interesting. That's for sure, Peter. That's wow.
Now put this together with the ratio that I just showed you, one of the highest ratios. In fact, we matched the ratio of the 2000 high right here at this all-time high, and then put that together with this 200-day pattern. I don't know, Larry, maybe we should start looking at fundamentals, huh?
Peter, it's a little too late for me, pal. I met you in 1965, and I stopped looking at fundamentals then. Folks, when I first met Peter, he had a hand-drawn chart. We didn't have charts like we have now. We had to get them, buy them, or make them ourselves. And he made a chart of the Dow Jones. It looked like a Jewish Torah. How much did that thing weigh at the very end? It must have weighed 30 pounds.
I don't know if it was that much, but it not only was heavy, it spread across about
I know.
My 35-foot living room. It spread all the way across.
Yeah, I can remember it. Yeah, those were the good old days. Boy, that's well, it's going to be interesting here. We have a question for one of our listeners. Do you feel that it's going to take something like an outlier event, like a nuclear missile going somewhere?
No. Okay, don't. My favorite market analyst of all time was Edson Gould, who made some incredible calls, made some amazing calls in the market. And he said, do not try to judge the market through fundamentals. You're going to be a complete failure. So, and that's what a lot of people tell me. Oh, I know you're looking for a top, Peter, but we're not going to get a top until what? You make up a news story, World War III or whatever, make up any news story. And I say, now, if you go back, I will challenge people to go back and look at the most important news stories of the last century, Larry, and none of them had anything to do, they never had anything to do with the stock market.
Yeah. I remember November the 9th of 1989 when the Berlin Wall went down. I had my newsletter. I said, if this thing is not on the front page of every single paper in the world, I'll give everybody a free subscription. That's how I said important that cycle was. And it was on the page. The market did nothing. It was unchanged for the day. So I snuck out through that one, but it was on all the newspapers, that's for sure. And it was earth-changing. That was certainly an outlier event. Hey, Peter, thanks for being with us, buddy. We're going to have you on in a few weeks, and let's see how this works out. And Peter, even if it doesn't, you're going to still be right there on my top of my list, pal. So keep up the great work.
Always fun to talk to you, Larry. Thanks.
You bet. Thank you, Peter. Peter Eliades, folks, Stock Market Cycles. We're going to take a little break here now for just a few seconds. I want to get up here, and we need to look at the S&P again. Hold on 1 second. The one thing I tried to do is I was really sort of embarrassed. I wanted to pull up the Philadelphia SOX index to look at it, but son of a gun, I wasn't really able to do that. So let me get the prices that we're watching here, where we are with the S&P. Let's just get this 2-minute chart out in here so we can see where we are. See, here's what my game plan was. And remember, this is the game plan was to sell the 382 retracement of the high we made yesterday. So if you went down and just take yesterday's high and get it in there, there's yesterday's high. As you can see, we'll move it over a little bit. There's all this stuff that's going on, a bunch of stuff going on in here. So what we were watching last night was from the high right here to that low right there. It came within 1 point, a quarter point of the number we were looking at. Now, that number right now is still valid. You can see it's made a slightly lower low. So 53.26, you might make that on the close, but I don't think we're going to close above that. Should we close above here? Remember, that was yesterday's low. It was way back here. See, yesterday's low was, here's the 16th, okay? And we've taken out that low by quite a bit. There was the low from yesterday. See, we took that low out. That's why it gives us a little bit higher 382 level right in here. Okay, anyway, that's it. Now, I had a question from someone. Oh, we got a break coming up here about trying to pick the top in silver. Folks, when you look at this long-term silver chart, I mean, this is You have to be. Let's just look at the monthly because you can see what we're looking at right here. You remember years ago, and I've been doing this show since way back here. Way back here, I was saying this is when I really, really got bullish to silver because we had the high here in August of 2011. This was the 70. We were buying the rounds, the silver rounds at $14. It was 50-cent premium or $1 premium. Now forget it. Anyway, we got at least $34 on this long-term daily here, a little bit.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
If you remember, folks, a couple days ago, we were having this action here. And the fact that the silver could not back off at all. I mean, this little tiny ABCD pattern here is like 20 cents, 30 cents in silver. It's basically nothing. Let's just take a look at it here. And gold is jumping around all over the map, folks. It's jumping $20, $30 when this is doing this. There was your low right here. If you took that last previous low, that was right there. You'll see it. What did it do? It came right down to just about the exact 3.8. Well, it did make the exact 3.82 because that says 0.44, and there's the low. That tells us that we're probably going to get up to this level here today. Am I going to be selling up in there? No. Not for an instant. I wouldn't. But anyway, that's what I'm paying attention to here today as we're looking these things unfold. We've got gold here. Not very far away. Let's get this back this up here on the daily because we haven't made new highs on gold yet. See, folks, we were real close within a heartbeat. And there's our old high back here at 448. Right here is when I became real bullish, folks. I was bearish coming into this week. See, there was last week, okay? This is Friday, Thursday, Wednesday, Tuesday, Monday. Looked like, oh, boy, we got a good winner here because we sold it up into here. It dropped $40. And as you can see, let's just get on the hourly chart here. This is where the whole pedal to the metal changed. Let me get this over here. And that was right when we got down to right here after we had that 85. You see how the market came down here and stayed right at the 382 and stayed there, and then then boom, 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 and now you can see where we are going right now here in the gold. We should make a new high today at 24.31. I mean, that's if you just drawing them in little by little, you'll be able to see you've got some larger ABCDs from the previous day. There's your big one right here. That should take us up, making a new high here on the day, much like silver. So that's what we're looking at, folks. Live every day in an attitude of gratitude, and may God bless. And I'll see you on the flip side Monday with the Wizard Winsky will be our guest.